Hi, this is Sebastian, and I just wanted to share this piece from the Intelligent Investor today because it's April 4th, 2025, and this is the time when the tariffs came in. But I just wanted to kind of show what an intelligent investor actually is and how to make good investment decisions according to the intelligent investor. And it's on page 189. I'll read this out to you. So, market fluctuations as a guide to investment decisions. Since common stocks, even of investment grade, are subject to recurrent and wide fluctuation in their prices, the intelligent investor should be interested in the possibilities of profiting from these pendulum swings. There are two possible ways by which he may try to do this: the way of timing and the way of pricing. By timing, we mean the endeavor to anticipate the action of the stock market, to buy or hold when the future course is deemed to be upward, to sell or refrain from buying when the course is downward. By pricing, we mean the endeavor to buy stocks when they are quoted below their fair value and sell them when they rise above such value. A less ambitious form of pricing is the simple effort to make sure that when you buy, you do not pay too much for your stocks. This may suffice for the defensive investor, whose emphasis is on long pull holding, but as such it represents an essential minimum of attention to market level. We are convinced that the intelligent investor can derive satisfactory results from pricing of either type. We are equally sure that if he places emphasis on timing, in the sense of forecasting, he will end up as a speculator with a speculator's financial results. This distinction may seem rather tenuous from the layman, but it is not commonly accepted on Wall Street. As a matter of business practice, or perhaps thoroughgoing conviction, the stockbrokers and investment services seem wedded to the principle that both investors and speculators in common stock should devote careful attention to market forecasts. I wanted to kind of share this as really a difference of the intelligent investor versus a speculator, because right now in the market with tariffs going on right now, it's a speculator's market right now. And what actually happened because of that is people keep speculating the price. So they think right now they should sell, and for the past 2 days, I think the stock market fell at, I think, completely 10%. I mean we're technically in a recession, but the thing is, I think the government may do some things to help it bounce back. But for the intelligent investor, when you think about it, right now is the best time if you really realize what actually goes into an intelligent investor. Because for them, it shouldn't be timing, but buying when the price is way below its actual value. And actually, that's not really speculatory, because if you think about it, if you do your research, you wouldn't be a speculator, because to do the research, it takes you a long amount of time. And as a speculator, you kind of have to rely on what's going on with market data to be able to speculate. So bet on the price is going to be high, bet on it's going to be low. And on the intelligent investor's perspective, actually, you skip all of that and focus on market analysis and actually seeing, hey, is what I'm buying actually the price below what it's valued at? And if so, I should buy and hold it, right? I shouldn't sell it a couple weeks later as a speculator, but rather as an intelligent investor, I know that down the line that would actually assist in my investment gains, and actually my expected value increases because I did research and I actually lowered my risk. And part of lowering my risk is holding on to it, right? Because as a speculator, you want to sell it to make that gain. But being a speculator, you get speculator gains. And the thing is that your expected value is through the floor as a speculator. Because if you think about it, the risk is so high and the reward is really high too. But when you actually multiply your odds by what you're going to get, it's way lower than you think. And that's why it's much better to be an intelligent investor. And thank you for listening, because this is some valuable information, especially in this time. And I think everyone should hear about this.